As rising housing costs weigh on would-be buyers' nerves, sellers are sweetening the deal with more concessions. Around 2 out of every 5 sellers offered buyers concessions during the first quarter, according to Redfin data. That's just shy of the highest level on record. Joining us now with more, we've got Daryl Fairweather, who is the Redfin chief economist. Daryl, good to see you. What do you attribute this rise to? Take us into the data.
It's all the uncertainty in both the economy and the housing market. When things change in buyers' lives or in their personal financial situation during that escrow period, that's when we see sellers start to sweeten the deal to make sure that the deal goes through. That might mean covering closing costs, buying down points on a rate, or offering to cover repairs. But all of that just makes it more likely the deal will go through and the buyer will still commit to it, even though interest rates are all over the place, the economy is all over the place. They want to make those deals happen.
And so you started to mention some of those examples of concessions. How effective are they in really making sure that the deals come to a close?
They are quite effective because they represent real savings to the buyers. Covering something like a repair or closing costs or getting the interest rate down all means that the buyer isn't having to spend as much. So it's a little bit different than a price cut. It doesn't show up in the sales price, but it is effectively giving the buyer more money.
So could you quickly define for first timers? I know I have a lot of tabs open. I haven't really pulled the trigger or saved up adequately enough for any of those tabs that are open. But for first timers out there, what's a mortgage rate buy down?
So when you go to your lender, they will offer you different types of mortgage options. And one option is to pay more at the beginning so that you have a lower mortgage payment later on. And it's called points, but basically it gets you a lower rate by just paying more upfront.
And so which metro areas in the U.S. are actually seeing some of the highest concession rates from what you've been able to analyze?
Seattle, Portland, San Diego are all at the top of the list. These are markets where there is still strong demand, but with all the uncertainty in the economy and interest rates being volatile, it is difficult for buyers. In places like Florida and Texas, we see more straight up cancellations, buyers just walking away and saying, this is too much for me. But in Seattle, buyers want to make it happen. They just need a little bit extra encouragement.
Wow. Okay. I'm a little more focused on some of those those hotter areas of the map that we were just showing a moment ago. But as we think more broadly here about the annexation and the kind of guide that the 10-year yield gives us to what mortgage rates and the fluctuations there are, as you're continuing to hear from what the administration is looking for within that 10-year rate versus what is really playing out, how are we seeing that also play out into the home buyer sentiment right now?
Well, right now we are seeing rates climbing, and part of the reason is because of, let's say, the lack of faith in the U.S. economy and our institutions. If the Federal Reserve were to lower interest rates, it actually wouldn't result in lower mortgage payments. So it would probably make mortgage rates even higher because it's a signal that the Fed isn't really doing its job of taking care of inflation. So I don't think that's going to happen. I think the Fed will keep interest rates high, and that's what the market thinks too, which is why we're seeing increases in rates right now.
What are the things that first-time home buyers who are looking across everything that we're discussing, from the possible concessions to what the interest rates influencing mortgage rates is looking like, all the way to the hotspot regions, what are the things that first-time home buyers need to mention and prioritize perhaps when they are going into the negotiations and discussions for homes?
Well, I don't think you need a PhD in economics to be a home buyer. Everything that's going on in the economy is really hard to understand, but I would focus on your personal situation. How likely do you think you are to be making as much money as you are right now this time next year, over the next 5 years? Because you need to make sure you're going to be able to make your mortgage payment, not just now, but for as long as you stay in the home. And with all the volatility in the economy, the thing I worry about is people biting off more than they can chew and wishing that they had saved more money. So definitely be cautious and just make sure you stick to your budget and think about what your personal situation is. And also play a little hardball with the sellers. Come in under asking price, ask for concessions. That's how you're going to get a little bit extra money out of those deals.